Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello and welcome to the Zach's Friday Finish Line. I am Ryan McQueenie, content writer here at Zach's, along with one of our editors, Maddie Johnson.
Hello, today is Friday, April 27th, and we're here to recap this week's biggest stories from the investment and financial world. It has been a long week of earnings announcements with Q1 reports from a tidal wave of consumer and tech behemoths pouring in over the past few days. So as Friday Finish Line listeners have grown to expect, we will have a full recap of all the latest earnings data you need to know right here on this week's show.
Overall, these earnings results were impressive, with growth in guidance enough to outweigh macroeconomic concerns that caused a sell-off earlier this week, notably the 10-year Treasury yields reaching 3% for the first time in more than 4 years on Tuesday.
But as Ryan hinted at, investors proved to have a short memory this week, with Wednesday's top reports helping to issue a turnaround. So let's start there.
Yeah, so I just want to start with Chipotle. As a proud Chipotle lover, and we always have to talk about the latest Chipotle news on the finish line.
I know. I kind of want to get Chipotle for dinner tonight.
Well, it was in celebration of a decent quarter for Chipotle. Beat earnings estimates, adjusted earnings of $2.13 per share, topping the Zach's consensus estimate of $1.54. In line with revenue estimates, $1.15 billion. Quarterly revenues up about 7.4%, with comparable restaurant sales adding about 2.2%. Chipotle also noted that it opened 35 new restaurants in the quarter while closing just 2 locations. That adjusted earnings figure was up 33% year over year. And looking ahead, the company said that it plans to open 130 to 150 new restaurants this year and report comps growth in the low single digits. So it's Chipotle's first report under new management, if you will.
The
very
new CEO,
literally,
right?
Yes, the new CEO. I think handled it well. Just getting started. Thinking about when he joined, I think that this fiscal quarter, he wasn't even really in charge of for the whole quarter. Maybe he started on day one. Yeah, he was former Taco Bell executive, and then as we talked about here, poached the marketing head from Taco Bell as well. So we're looking at a Taco Bell renaissance at Chipotle. So it'll be interesting to see. I think, comps growth in the low single digits, in line with this 2.2% they saw at the beginning of the year. But I think investors will certainly hope that Chipotle can outpace that guidance as we go forward.
Yeah, definitely.
Moving from one company that has had their fair share of public relations scandals to the next, with Facebook also reporting on Wednesday.
Yeah, one of the more highly anticipated reports. Facebook, again, blew it out of the water. They beat earnings estimates. The company reported earnings of $1.69 per share, which topped the Zach's estimate of $1.36 per share. They also beat revenue estimates. The company saw revenues of $11.97 billion, which also surpassed our consensus estimate of $11.45 billion. And total revenues were up 49% year over year. In particular, daily active users, or DAUs, rose 13% to 1.45 billion, while monthly active users, or MAUs, also increased 13% to 2.2 billion. Also, advertising revenues were up 50%, which is insane. But Mark Zuckerberg also put in a quote in the earnings release. He said that despite facing important challenges, wink, wink, our community and business are off to a strong start in 2018. We are taking a broader view of our responsibility in investing to make sure our services are used for good. End quote. So, again, off to a good start for Facebook, and investors are probably very relieved.
Yeah, definitely. It's interesting that language that he takes there, investing to make sure our services are used for good, because, as if you're looking at it from a Facebook investor's perspective, you hear the company saying investing, that means they're spending more money,
Sure.
Which is always a concern. But with that type of revenue and earnings growth, maybe it isn't actually a concern at all.
Right.
And it also is funny because about 2 or 3 quarters ago, when all the Russia stuff was the headline, and now it's the data privacy stuff, I guess, they're kind of two apples in the same tree, which I don't even know if that's a phrase or if I just made that up completely. But he took a very similar tone of like, we have to make sure our platform is being used for the right reasons and whatnot. And then 2 or 3 quarters later, we haven't made a ton of progress on it because it's just moved from one scandal to the next. But
and then there's Diamond and Silk, who maybe the change agents
sure.
Facebook will need.
Oh man, we didn't even really spend much time talking about the congressional testimony on the show, but that was some great television.
Oh yeah.
So anyway, moving on, we're gonna just out of the Wednesday's reports on the kind of the consumer and tech side, we're gonna get to a couple more, or at least one more report that was on Wednesday later in the show. But for now, just gonna talk about Visa. So I feel like this is always a great bellwether for the consumer economy, especially the American consumer economy. I had one friend of mine put it this way when discussing Visa as an investment option. Do you have a Visa debit card?
I do.
So that means you use a Visa product every single day almost, if not definitely every single day. I am the same, and basically every single person that I know is the same way. So that level of presence in our everyday lives means I'm always interested in seeing what Visa has to say when it reports. It posted adjusted earnings of $1.11 per share, beating the Zacks consensus estimate of $1.01. Revenue figures came in at $5.07 billion, which topped our consensus estimate of $4.78 billion and surged 13% year over year. Quarterly earnings up 30% year over year, and Visa also noted that payments volume jumped by 11%, while processed transactions climbed 12%. So another great quarter from Visa. They tend to just always beat estimates, so not too much of a surprise there. Moving from Wednesday to Thursday, equally busy day in terms of marquee earnings reports. We had Amazon after the bell.
Yeah, Amazon absurdly beat estimates. The company posted adjusted earnings of $3.27 per share, which crushed the Zacks consensus estimate of $1.22 per share. They also beat revenue estimates. The company saw revenue figures of $51.04 billion, topping our consensus estimate of $50.17 billion. Amazon's Q1 revenues jumped roughly 43% from over $35 billion in the year-ago period. So meanwhile, the e-commerce giant's quarterly earnings skyrocketed from $1.48 per share in the year-ago quarter. Sales from physical stores were $4.26 billion, and the company also reported first quarter fiscal 2018 revenues of $5.44 billion for AWS, which is their cloud services segment. And those surpassed our estimates and represents year-over-year growth of 49%. So Amazon, it's almost like you don't know what to expect from them. They did provide guidance, though, which we normally don't see in their earnings report.
Think the first time I can remember them putting guidance in earnings.
So at least we have like a feel for what they're going to do next quarter. But I remember last quarter they had a funky tax provision in their report, and I swear, like I was like gung-ho, that's what was going on in this report.
More weird accounting,
but no.
Yeah, it's just
no, it's just a huge over $2 beat. But that's Amazon.
Yeah, their earnings results are always strange, and I try to tell people, we're just trying to get into the ballpark these days because we never know what's going to happen. Nowhere close to the ballpark with this one.
No.
But yeah, I want to highlight one thing you said. Physical stores accounting for revenue of $4.26 billion. Of course, that's mostly Whole Foods, and probably a little bit of their bookstores. The bookstores thing, and I think that Amazon Go location in Seattle went open to the public recently as well. It was actually down quarter over quarter. They didn't list a year over year comparison on that line item. Makes sense. Yeah, interesting to note. It's a $51 billion quarter. Less than $4.5 billion of that came from physical stores. But obviously with the addition of Whole Foods, that is a top-line growth catalyst regardless. Mm-hmm. So definitely going to be a new line item to keep your eye on for Amazon going forward. I was surprised at how much they broke it down. They typically, like you said, no guidance, typically kind of cloak everything in mystery, and they have this 2 pages of, oh, we launched this service on AWS, and
Sure.
the Echo added
We're
these
so great.
apps, and it's like a whole bullet
Yay,
point
us.
list. And then you get down to the nitty gritty, and they don't actually tell you too much. But this time they elaborated a little bit more, and I think it's because now they are doing so much different stuff that they'd like us to
Yeah.
know a little bit about it. They broke down the physical stores, the subscriptions, and whatnot. So definitely interesting. And they're raising the price of Prime. That was crazy.
By $20.
Yeah, I think people will pay that.
I think so, but I also think some people won't.
It'll be
Because that $99 was the key for Prime, $99 a year, keeping
Yeah.
it under $100.
Yeah, it'll be definitely important to note that just drawing the comparisons to Netflix, which is obviously so much all of their revenue from subscriptions, we tend to see a positive reaction when Netflix has increased prices, but that's to the tune of 99 cents a month, whereas this is like a $20 upfront charge,
Right.
which works out not that big of a difference in the whole year, but for some reason I think there's that mental thing with the difference between $99 and $120. I don't know. It'll be interesting
Absolutely.
to see.
It'll also be interesting to see how its competitors react
Yeah.
with like what Walmart's going to do.
Yeah. I almost.
And then Jet.com, which Walmart owns, and all the other online retailers, how they're gonna kind of react to this jump in price.
Yeah, I mean, it could definitely send more people another direction if the.
Target too, can't forget about them.
I was hearing someone I follow on Twitter. Apologies that I can't cite them correctly, but they were saying it'll be interesting to watch if the internet kind of develops, or digital consumerism kind of develops into a 2-tiered economic system where there is a group of people who can afford to have Amazon Prime, and then like 3 to 4 media subscriptions. Obviously Amazon Prime is a media subscription, but look at like a Netflix, a Hulu, and then with Disney coming out with their over-the-top service soon, those will be the major ones with Amazon Prime. It's going to develop into a system where there is a certain quote-unquote class of people who can afford all of those subscriptions, and that is the experience they have with the internet and with digital consumerism. And then there's a subset of people who can't afford that and are almost living a different life when it comes to their interaction with online things.
Sure.
Because they just are, they can't afford when we're now talking about $40-$50 a month worth of monthly renewals, that it's every month.
Yeah.
And,
I agree, but it also depends on what these companies will offer, like bundling services wise, because Spotify and Hulu offer that
Yeah,
service. That's
definitely.
like $13 a month now. If whenever Disney rolls out its services, will it combine with Hulu as well?
'cause
Because
they'll have
Hulu is under the Disney umbrella. What's Netflix going to offer to counter that? What's HBO going to offer to counter that? Because with Hulu now, you can add on Stars and Showtime. You can add on those channels. You can add on HBO, Stars, Showtime, I believe, to Amazon as well. Will those channels cut down on prices to counter that? So I think that's an interesting perspective, but I think prices are gonna go down.
It'll figure itself out.
It'll figure itself out.
Yeah.
But I do agree. Like there is a certain group of people who can afford $50 in internet.
Yeah.
But I mean,
Not everyone can.
not everyone can.
Yeah. So moving on here, we're going to move on to Microsoft, also reporting on Thursday afternoon. Another double beat. Adjusted earnings of 95 cents per share beat the Zacks consensus estimate by a dime. Revenues of $26.82 billion topped our consensus estimate of $25.71. Impressive beat on the top line there. Revenue was up 16% year over year. Earnings up from 73 cents in the year ago period. A couple of segments to look at here. Intelligent Cloud unit revenue was almost $7.9 billion. That topped our consensus estimate. of 7.7 billion. And then also productivity and business processes and more personal computing, the other two major segments, also topped our revenue estimates. So another strong quarter for Microsoft. Interesting because definitely different business model than that of Amazon, which we were just talking about, but kind of competitors now in some ways on the public cloud side of things. AWS and Azure, a little bit different in who they're kind of going after and what kind of services they offer, but definitely two of the major names, two of the major options on the public cloud. So interesting to see that cloud business continue to be the catalyst for Microsoft as it shifts away from the personal computing first business model. Moving on, though, I want to talk about semiconductors. This is what I was hinting at when I was talking about, when I was mentioning we'll have one more report from Wednesday, because Maddie, I'm going to have you touch on AMD here in a second. I'll follow up with Intel's results from Thursday. We also had Qualcomm coming in this week with a decent report. But I want to talk about semiconductors kind of as their own segment, because heading into this earnings season, there was a lot of hullabaloo in the semiconductor space and kind of this overarching sentiment that the strong bullish cycle for semiconductors just had to be running its course soon. A lot of nervousness about whether, obviously with the tax provisions, great earnings data was kind of cooked in already, and people, I think, were worried about what guidance was going to look like. And I think in at least a couple of cases this week, our major semiconductor reports helped ease those concerns, and that definitely started on Wednesday afternoon with AMD.
Yeah, so AMD, Advanced Micro Devices, they beat earnings estimates. The company posted adjusted earnings of 11 cents per share, which beat the Zacks consensus estimate of 9 cents. Investors should note that this consensus projection has trended upward over the duration of the quarter. The company also beat revenue estimates, and the company saw revenue figures of $1.65 billion, which also beat our consensus estimate of $1.55 billion. Total revenues were up 40% year over year, which was pretty impressive. So the company's computing and graphics segment revenue was $1.12 billion, and this was up 95% year over year. An estimated 10% of total sales came from crypto mining, which was pretty interesting. So for the second quarter of fiscal 2018, AMD expects revenues to fall in the range of $1.675 billion to $1.775 billion, and this is higher than our current consensus estimate of $1.58 billion.
Yeah, I mean, the low end of that range outpacing our previous consensus estimate by $100 million. Certainly strong guidance from AMD. As you mentioned with the crypto thing, 10% estimated their business coming from crypto right now. It was interesting to see the company's management team kind of dance around the subject in some ways on the conference call. Not that they didn't address it, but I think the overarching story that came out of the report was that analysts were expecting weakness in the crypto mining side of things because of how volatile cryptos have been recently. Whether there was weakness there or whether there wasn't weakness there, still a little bit unclear, but certainly not weak enough to have a major impact on the report, and positive trends in other areas of that graphic space enough to outweigh that, and great guidance, as you mentioned. Going from AMD to the semiconductor behemoth that is Intel, which is, of course, a rival of AMD in some markets. Intel coming in on Thursday afternoon posted non-GAAP earnings of 87 cents per share, crushed the Zacks consensus estimate of 71 cents per share, and that estimate was trending upward during the quarter, so beating an already revised higher estimate. Revenue figures came in at $16.1 billion. That surpassed our consensus estimate of $15.05 billion. Total revenue, excluding McAfee, was up 13% year over year. Interestingly, gross margin was down 1 point to 62.3%, but operating income surged 21% to reach $4.8 billion. in the quarter. This was one of my favorite things, is that they very clearly listed their effective tax rate, 11.7% in the quarter. That was down from 22.3% last year. That certainly helps with earnings. And I wanted to highlight that the revenue in the client computing group was up 3% year over year. That remains Intel's largest unit, but the real story was the data-centric revenue for Intel, with the data center group witnessing growth of 24% from the year ago period. Guidance also pretty strong. Expect non-GAAP earnings to come in the range of 80 cents to 90 cents per share in the current quarter. Heading into the report, we were looking for earnings of 80 cents per share, so the low end of their guidance range. That's definitely a solid guidance trend. So I'm comfortable with saying it. The imminent death of the semiconductor bull run has been slightly exaggerated, and I think this week's reports show that there's definitely plenty of strength to go around, and that this run still has a little bit of life to it. Obviously, Intel, the impact that it has on the broader tech sector and kind of how it is a bellwether for everything else that's going on in tech, is also important to see that great guidance. So, I mean, looking at just recapping everybody we've touched on here: Chipotle, Facebook, Visa, Amazon, Microsoft, AMD, Intel, beats all across the board. Obviously, a good week for earnings.
Yeah, and overall, FANG stocks have been doing. I mean, they crushed it. Apple's next week, so we'll see how they do. Yeah, Q1's off to a really good start.
Definitely. And that just about does it for us this week. Reminder, shoot us an email at podcast@zacks.com if you would like us to cover a different story, or if you thought we missed something. You can also check out all of our other exclusive audio content at zacks.com/podcasts. Remember to subscribe and leave us a rating on Apple Podcasts. And also remember that we are now available on Spotify. Just search Zacks Investment Research and you'll be able to find all of our shows. Thank you again for joining us. We will see you next time on the Zacks Friday Finish Line.